One handle, two platforms. That handle is the only fingerprint they can't forge. If anyone DMs you for money, wallets, VIP access, or signals, it's a scam. I sell nothing. Ever. Now type 180 in the comments if you're actually locked in, because silver can be up triple digits over the year and still crash today, and the truth they're hiding isn't a secret meeting. It's the part nobody wants to learn. The trend and the path are not the same thing. Let me hit you with the numbers first so your brain can't wiggle out of it. Trading Economics shows silver hitting fresh lows on March 3rd, 2026, prints around $80 and even $80 depending on the update snapshot, down roughly 8 to 10% from the previous day, while still being well over 150% higher than a year ago on their CFD benchmark. They also show the January 2026 all-time high at 121.64. And FX Leaders frames the same paradox from the other side. As of March 3rd, 2026, silver is around 90.20, which they call a 182% increase over the past year, and they also cite that same 121.64 late January peak. So yes, both can be true. Up huge over the year, down ugly today. That's not inconsistency. That is silver doing what silver does, shaking you out. Now here's the truth they're hiding, said plainly. Silver bull markets are designed to feel fake in the middle, because silver is not just a precious metal. It's a positioning vehicle. It's thin. It's volatile. It's leveraged in paper markets. And it has a dual identity that makes it behave like two different assets depending on the day. FX Leaders even calls it a dual threat asset, safe haven and industrial backbone, especially in solar and EV demand narratives. And that dual identity is exactly why you can see a one-year chart that looks unstoppable while today's candle looks like betrayal. Stop. This matters. Most people lose money in silver for one reason. They confuse macro regime with liquidity regime. Macro regime is what drives the one-year move, big picture forces, geopolitical insurance demand, structural deficits, industrial demand stories. Liquidity regime is what drives the one-day crash. Dollar moves, yields, risk desks tightening, margin calls, stop cascades, paper leverage getting flushed. Silver lives in both regimes, so when liquidity stress hits, silver can dump hard even when the macro story is still intact. That's the whole paradox. Now let's extract the key material from FX Leaders and turn it into a map your audience can actually follow, because without a map, they just react. FX Leaders says silver has surged to $90.20 and lists a quick overview that blames Middle East conflict plus supply deficit plus green energy demand. They go further and claim a 67 million ounce shortfall for 2026 and call it the sixth year of consecutive deficits. Plus they argue stock drawdowns in London and New York are meeting industrial demand. Then they shift to the part that actually matters for surviving the tape, levels and behavior. They say the 91.33 pivot is the make or break intraday point, reclaim and hold it, and they claim the path toward 97.69 is open. They call $100 the psychological barrier, and they claim a break into triple digits could trigger squeeze-like behavior as desks scramble for physical delivery. They call 87.69 must-hold support, the line in the sand. And if that breaks, they point to the 84.90 zone as the next area where whale buyers may step in. And Trading Economics is basically telling you we are already in that zone on March 3rd, with silver printing around $82 and even $80 depending on the update, while still massively higher, why? So here's your battlefield. $91.33 is the pivot to re-enter bull control. 87.69 is the line in the sand for don't lose it. $82, $84, $90 is the zone where the market decides if this was a flush or a break. Now, I'm going to say something that your audience needs to hear more than they want to hear. A market that's up 150, 180% year over year is not safe. It's crowded. Crowded markets don't break because the story is wrong. Crowded markets break because too many people used leverage at the same time. And leverage gets punished first. That's why silver's bull moves are built out of violent down days that feel like the end. Now stop. Pattern break. Gold rewards fear quickly. Silver charges a toll for fear. That toll is volatility. Now let's talk about the trap that created crashing today while the year looks amazing. It's the $100 magnet. FX Leaders literally frames the whole narrative as the race for $100 starts now. And whenever the whole market stares at a round number like $100, you get predictable crowd behavior. Breakout chasers pile in because they want to be early. Profit takers sell into the crowd because they already are early. Stops cluster underneath obvious supports because that's where retail hides. And then the market only needs one spark, a stronger dollar, rising yields, a risk-on bounce to trigger the cascade. That cascade is how you get the crash today candle. And here's the important part. A crash today does not automatically mean the bull story is over. It means the market is cleansing positioning. The adult question isn't, is silver dead? The adult question is, was this a flush or a break? Flush, Dos, forced selling, then fast rebound. Break, demand disappears, rebounds get weaker, price can't reclaim. And the only way to tell is behavior after the slam. This is where most people get tricked because they watch price like it's a scoreboard. In silver, you watch price like it's a lie detector. So here's the single most important tell you can teach your audience. Rebound speed. Not rebound size, speed. If silver dumps into the $82 to $85 band and snaps back quickly, the selling was mechanical, leverage and stops, and real demand was waiting. If silver dumps into the $82, $85 band and bleeds slowly, the market isn't done cleansing and the unwind can continue. Now I want to connect something subtle that people miss. FX Leaders gives you levels, but they also give you institutional sentiment language in their pros playbook. They suggest an entry between $87.70 and $88.50, targets $91.30 and $97.50, and a stop below $84.90. Whether you follow that exact plan or not, it reveals something important. Even their risk management assumes $84.90 is a critical floor. And Trading Economics shows the market is probing below and around that band on March 3rd. So what does that mean in plain English? It means the market is currently testing the zone where paper confidence either stabilizes or breaks. That is why the moment is important. Now let's clean up the truth they're hiding phrase in a way that keeps credibility. Nobody has to hide the one-year return. It's public. What people hide, what they don't teach, is the psychological war in the middle, the 8 to 10% down days, the stop cascades, the fact that silver can hit an all-time high around 121.64 and later trade in the low 80s and still be in a broader uptrend. That's the part that makes silver look fake. But it's not fake. It's the mechanism. Silver's bull market is built by removing the people who can't survive volatility. Now we do the OG-style binary scenario analysis because it keeps retention high and keeps you honest. Scenario A, this was a flush and the bull trend is reloading. Silver holds the 82-85 zone, rebounds quickly, reclaims 87.69, and then starts battling the 91-33 pivot again. In this scenario, the race to 100 narrative doesn't die. It just gets delayed until leverage is cleaned out. Scenario B, this is a break and the unwind isn't done. Silver breaks below the band, rebounds get weaker, and price can't reclaim $87.16. In this scenario, liquidity stress stays in control longer, and the market needs time to rebuild before it can attempt $100 again. We don't guess which scenario we're in. We watch. So here's your 48-hour watch list. Simple, binary, and addictive. First, 87.69 reclaim. FX Leaders calls it the must-hold support line. If silver reclaims it quickly after the dump, you likely just witnessed a flush. Second, 82 or 84.90 response. FX Leaders points to this band as the next zone if 87.69 breaks. Trading Economics shows silver printing around $82 and even $80 on March 3rd. So watch what happens here. Does price get absorbed and rebound fast, or does it slice through? Third, 91.33 pivot behavior. Reclaim and hold above 91.33, and FX Leaders says the path toward 97.69 opens. Fail below it, and you're still in repair mode. Fourth, $100 door behavior. $100 is psychological. It's the magnet. It's the headline. If silver approaches it again after building a base, the break can be explosive. If it approaches it in a vertical spike with no base, expect another trapdoor. Fifth, keep the big anchor in your head, 121.64. Both sources cite it as the January all-time high. The closer price gets to that zone again, the more fragile the tape becomes because the crowd will chase and the market will punish. Now, I'll close this the way you want. No headings, pure voiceover, 3 takeaways, and a cliffhanger. Takeaway 1. Trading Economics shows silver crashing on March 3rd, prints around $80 and even $80 in different updates, down roughly 8 to 10% from the previous day while still being 150% or more higher than a year ago, and it confirms the January 2026 all-time high of 121.64. Takeaway 2, FX Leaders frames silver around $90.20 and calls it a 182% one-year surge, driven by safe haven demand, deficit narratives, and green energy demand stories, while laying out the battlefield levels. 91.33 pivot, $100 barrier, 87.69 line in the sand, and 82.84.90 next zone. Takeaway 3, the truth they're hiding is that silver's bull markets are made of violent flushes. The trend is real, the path is brutal, and the path is what creates the trend. Here's the cliffhanger. If silver rebounds fast out of the 82.85 band and reclaims 87.69, today wasn't the end, it was the cleanse. And if it can't reclaim, if it bleeds and bounces get weaker, then the market is telling you the leverage flush isn't done yet. This isn't financial advice, this is financial warfare education.